Welcome everyone. In this video, we will look at when Zbcn coin upward attack will come. Don't forget to like and subscribe, and please watch to the end to understand. And looking at the chart, there is a clear downtrend structure that the price has been in for a long time. This trend line has been tested by the price many times over time, and each time it has come into contact with it, the price has reacted downwards. However, it's important to note that just as every trend line has a breaking point, this trend has the potential to break sooner or later. In the current situation, we see that the price is once again approaching and moving towards this falling trend line. When we look at the previous touch points, we can see that each time the price was pressured here and experienced pullbacks. But with each contact, the strength of the trend line may be getting weaker and weaker. If this time the price manages to break the falling trend line to the upside, we could see a significant shift in the market and an important signal that buyers are gaining strength. If such a breakout occurs, the obstacles in front of the price will be removed one by one, and the ground will be prepared for the upward movement. In this case, it's also of great importance to follow whether the price will remain above the trend. If the price breaks above the trend and forms a solid support here, it is likely that the upward movement will gain momentum and a strong bullish wave will begin. Breaking downtrends in particular creates a major psychological transformation in the market. While prolonged downtrends cause investors to be cautious, breaking these trends to the upside leads to increased confidence and buyers entering the market more strongly. Breaking this downtrend makes the attack, but we need to look at other factors to be sure. So keep watching. According to the Elliott wave theory, we know that the market moves in a certain harmonic structure. Looking at the current situation, we can say that the first and second waves have been completed. The price usually goes through a correction in the second wave phase. In this phase, the market takes a breath after the previous rise, allows new buyers and sellers to enter the market, and creates a certain equilibrium. Therefore, the second wave is usually a period in which the price follows a horizontal course, testing support and resistance levels from time to time. However, the critical point here is that just because the second wave is a prolonged correction does not mean that the price has entered a recession. On the contrary, this stagnation is usually a preparatory phase before a big move. The market often tends to mislead investors in the second wave. Many may think that the market is losing strength at this stage, that the uptrend is over. But according to the Elliott wave principle, the third wave is known as one of the strongest and biggest waves. So this sideways movement that we're in right now could be a harbinger of the third wave. The third wave is usually when the market gains the most momentum and the price rises the most sharply. From an investment perspective, this is the phase that offers the most opportunity for gains. This is because it's a phase where the market is using the support from the previous waves to surge higher, and many people are trying to get on board. But how strong will this rise be? Fibonacci levels provide the answer. Usually in Elliott wave theory, the minimum target of the third wave is considered to be the Fibonacci extension of 1/618. This usually indicates a strong bullish move. As we noted on the chart, the potential targets of the third wave are marked by the yellow and green lines. These levels indicate possible resistance zones that the price could reach if the third wave is completed. Another point to note here is the characteristic of the third wave. The third wave is usually supported by news flows, market psychology, and investor interest. So if the market is already bullish and the news flow is positive, the third wave may be stronger than expected. The most important strategy for investors at this point is to be patient and wait for the market to form the third wave. Because during the correction phase of the second wave, many people may get scared and sell early or exit the market. However, when the third wave starts, it is often difficult to re-enter the market as the price moves very fast. When the third wave starts suddenly, it is very likely that the price will surprise investors by making sudden jumps. It is important to remember that even though the price seems to be moving sideways at the moment, we are actually in the process of accumulation ahead of a big move. Throughout this sideways process, the price will test support and resistance levels, gather liquidity, and at some point, will make a sudden breakout. When this breakout comes, we can see very clearly that the third wave has already started. Therefore, the current sideways movement should not be seen as weakness, but as a preparatory phase before a big move. If it is supported by Fibonacci levels, the third wave can move strongly towards its targets. We need to be patient and wait for the third wave. When we watch the progression of the ascending triangle pattern, we actually observe an important structure with a deeper meaning. As the price gets stuck in this structure, the market becomes increasingly indecisive and eventually reaches an important decision point. This type of pattern usually gives strong clues about the direction in which the trend will continue. Therefore, each step inside the ascending triangle pattern may be laying the foundation for a new uptrend. As the price continues to squeeze lower support levels over time, we should be aware of how valuable this squeeze actually is. Because when the price stays at a certain level, it allows buyers to accumulate more and more each day, creating a strong momentum. Just like a spring, the accumulation of price to move further upwards can eventually trigger an upside breakout. In this case, the price is likely to make a strong breakout at the end of the squeezed area. As we approach the upper boundary of the triangle, another important point to note is the perception of market participants. Buyers will constantly make attempts to break through this zone, and the market will be forced to buy more. This is the characteristic feature of the ascending triangle: resistance being pushed and buyers putting pressure. If the price manages to break through this resistance level, we can gain serious momentum towards the first target points above. On the other hand, if the price fails to show any continuity at the upper boundary of this triangle and fails to break through this level, the triangle may lose its meaning and selling pressure may increase. However, for the time being, market dynamics show that the ascending triangle pattern usually breaks to the upside, and such breaks are usually followed by big moves in the market. Once the breakout occurs, the price action can bounce upwards with great volatility. The strength of this bounce could create great opportunities for both short-term and long-term investors. If the breakout occurs, significant price increases can be observed in the next few days or weeks, and thus the attack we have been waiting for has arrived. A rising trend in the RSI indicator actually indicates that the market is built on solid foundations and that buyers remain in control. A rising RSI trend not only indicates that the price is moving strongly upwards, but also that buyers are maintaining the dominant power in the market, meaning that selling pressure is almost non-existent. This signals that the market will continue to strengthen further and more traders tend to join in. Especially recently, the points where the RSI touches the lower boundary of the uptrend are very important. When the RSI reacts here, it suggests that the market has found support at these levels, and traders think that prices will go higher. Such movements are usually a sign that strong buyers are intervening in the market and sellers are fading. The movements of the RSI inside this uptrend emphasize that the price is still in an uptrend, with strong momentum for the trend to continue. If the RSI touches the lows of this uptrend again, a reaction can be expected once again. This means that even if the price declines a bit further, it will still face strong support at the same level. When the RSI hits such levels and reacts, traders may see them as a buying opportunity. That is, the RSI's reaction on every contact can act as a catalyst for the price to move higher. This draws more buyers into the market, and traders may consider these levels as an opportunity. If the RSI stays within this uptrend, it reinforces the positive sentiment on the market. Traders prefer to buy at such support levels, which helps the price to continue its overall uptrend. When the RSI comes back to these levels, it's a sign that the market is recovering strongly, and the upward movement is likely to continue. This means that the price may break through an important resistance level and make new highs. And remember that the RSI and the price move at the same time. If the RSI bounces, so does the price. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.